Hello everybody and welcome to MD's Options Trading. In this short video, we will discuss how we can combine price action along with the option strategies. If you see, I can show you my LinkedIn post on 16th of August around 3 weeks back. I had recommended or I had posted like there was some RSI diversion in Bank Nifty. Give me just one second. See, this was my post which I posted. RSI diversion in Bank Nifty, and I had mentioned in daily time frame the price was coming down but RSI was going up. You can see here in this chart at this particular moment the price was coming down but RSI was going up. This was I mentioned on 16th of August when everybody was bearish about Bank Nifty due to some that Hindenburg report. But my technical analysis said that crossing this particular neckline will prove the RSI diversion and Bank Nifty may go up. And the same thing happened. The Bank Nifty went up. Now in this week also, today morning, morning, everybody was bearish about the Bank Nifty. But I was sure like till that time Bank Nifty does not cross this low, I was not bearish about the Bank Nifty. This is what my observation. See, it's not like that I'm not bearish or I'm not expecting a kind of correction. Definitely correction may happen. If the correction may happen, then I will find out some bearish trades as well. But as of now, till the point this low is intact, I will not be much bearish about the Bank Nifty. So in today morning also, by watching the RSI diversion of 1 hour, I can show you the 1 hour chart. First of all, the Bank Nifty was at good support. This was a good support. Yeah, you can see it in the daily time frame as well. It was at the good support, and near to support, I could find one great RSI diversion on hourly time frame. You can observe here. Once RSI was going down, price was going down, RSI was coming up. Same thing you can observe on even lower time frame as well. If you go to 15 minutes time frame, you can clearly see this kind of diversion. See, the price was going down but the RSI was going up significantly. So I was waiting for a kind of confirmation on hourly, and I was looking or I was waiting for Bank Nifty to cross this high, or you can say this neckline. After this neckline, my target was 51,000. I knew that if this neckline is crossed, then Bank Nifty may go towards 51,000 and this could be my stop loss. Now in general case, I could have either bought the call option or I could have sold the put option. So many options are there, but I have preferred to deploy one calendar spread over here, because whenever you combine different option strategies with your price action, now your risk reward increases fantastically. So even if your view goes wrong with the different kind of option strategies, your risk or your loss, it will be very minimum, and if your view goes right, then your profit, it will be maximum. So what I did, I deployed the calendar spread in Bank Nifty, and I deployed in the money calendar spread. When Bank Nifty had crossed that 50,600, I sold 51,000 put option. I sold 51,000 put option, and in the current series, and I bought same, that is the 51,000 put option I bought. So I deployed the calendar spread. This one I sold and this one I bought. I will show you here. This was my live trade, you can see, which I closed today itself. Actually, I was not expecting market to give such a big movement in one day itself, but it gave. That is a good part. And you can see here in Opstra, I deployed in the money calendar spread for Bank Nifty. That is the 51,000 put option I sold for 18th of September, not for tomorrow's expiry. And I bought for the 51,000 put option in September series. So that way I did the calendar spread. So whenever Bank Nifty went up today itself, in one day, whenever it went up, immediately within just 2 or 3 hours, it gave me the profit of 266 rupees. 266 rupees per lot. If you consider, in order to deploy the calendar spread, around margin required for Bank Nifty is 27,000. So this is 266 rupees divided by 27,000. So it had given me the profit of close to 0.98, you can say 1% in one day. So 1% profit it has given, that is good part. But moreover, what is the important part? Even if my view would have gone wrong, this was my stop loss. This was my stop loss. If I had bought some, you can say future or you can say call option, then my loss could have been bigger. But as I deployed it in the spread, if it would have crossed this low, no, my loss would have been much less as compared to my profit. So risk reward was fantastic. Now different question comes, like why did I sell? I will show you here. Why did I sell in September, that is 18th of September expiry? Why not in the current week expiry? The reason being, the day before, the day after tomorrow's expiry, the date I guess it will be 11th of September. I could have sold the put option for 11th of September and I could have bought it for the 18th of September. But why I did not do like that? Why I sold after 2 weeks and why I bought after 3 weeks? The reason being, I was not expecting such a furious movement for the Bank Nifty. As per my expectation, after crossing this neckline, Bank Nifty may consolidate over here. I was sure like Bank Nifty will go to 51,000. But I was expecting a kind of consolidation over here and I was expecting my target to achieve by tomorrow or day after tomorrow. And let's say by chance if any bad news occurs during night time and if the Bank Nifty opens gap down somewhere over here, then what will happen if I would have sold for current week, that is on 11th of September. If instead of 18th of September, if I would have sold it for 11th of September, no, then the gamma effect it would have been much higher. So in order to avoid that risk, what I did, I sold for 18th of September and I bought for 25th of September. And the good part about the calendar spread is, I will show you another thing. I will show you here. Let's say for example, what is the benefit of calendar spread? For example, if I am bullish about Bank Nifty and I want to deploy the calendar spread, for example, now what I can do for 18th of September for Bank Nifty, I will select options over here, and for 18th of September, I will sell 51,500 put option. This is just assumption. Assume that if I am now bullish about the Bank Nifty and I want to sell the calendar, and then what I will do, 25th of September, same strike price, that is 51,500 put option, I will buy. So this is how my payoff graph it will be, and if the market starts going up, then it will start giving me the profit, and if it starts going down, my loss will be very minimum, because this loss will be on the day of expiry, not today. So my loss will be very much minimum. And most important part, if you see Greeks over here, my delta is positive. Of course I am bullish, so my delta has to be positive. My theta is also positive. So even if market consolidates, I will get the benefit of theta decay. And another part, my Vega is also positive. If my Vega is positive, that will help me during the high VIX conditions. Because let's say for example, because of some news, if tomorrow IV increases or VIX increases, then that is going to help me out. Let's say if my view goes wrong and Bank Nifty starts going down from here, it's quite possible that anybody's view can go wrong. If Bank Nifty goes down, then generally during down market VIX increases generally, although it's not a rule. Then in that case, this Vega, positive Vega, it will help me out. So if the market is going in my way, that is in upper way, that is going to give me the good profit or the bumper profit. If my view goes wrong, in that case I will be ending with the minimum loss. This is called as a risk reward ratio. So I could combine the calendar spread along with the price action. Likewise, so many other option strategies are there, like the call spread is there, put spread is there, this calendar spread is there. If you can combine these option strategies along with your price action, then definitely it is going to help you out. So thank you and stay tuned. Thank you.